slows down or reverse, and now you can't take no money out. Or your credit has now gotten real bad to where you can't take any money out. So, like you said, what does his score look like with that maxed out credit card? So these are all things that, these are all the things that the American people need to look at. Look, 702-751-5865, 702-751-5865, or go to defendersoffinance.com, and you need to reach out to us ASAP, ASAP, and contact the coach. Sit down, see what it is that your real estate needs. Contact me, see what your financial needs are. Let's do an overview. Let's sit down and let's go over all your finances, and then let's go over your real estate. We need to see what's going on, because therefore there's a connection somewhere in there. I know it is. And if you're sitting on that much equity, you have that much consumer debt, we got to get rid of it, because the debt structure in America is just going out of control. And I know so many people that got lots of equity and they're not touching it because of the interest rate.
Right. So we're not selling cash out refinances here. I want to add that if you don't have any consumer debt, high interest debt, you could have tons of equity in your property. If you don't need to do a cash out refinance, then don't do it. I mean, rates are up right now. If you have a low enough interest rate, we can't lower your interest rate by a substantial amount or get you some money out to take care of debt, then that's not the plan. We don't go there. But what I do want to segue into and speak to is home ownership. If you I get this question all the time. The market is tough. The rates are up. Should I purchase? Okay, I want to touch on this again. Okay, if you do not own a home, I would suggest that you look into purchasing. If you are renting a home, that's the number one category that you should be worried about, because the landlords are looking at the equity that they get. And if at any time, God forbid, the landlord dies, the heirs come along and they have it, they don't want to deal with it. They want to sell it, or for any reason that the landlord, the owner of the property that you're renting, wants to sell, you're subject to that. And the rental market, if you think the housing market is bad, the rental market is 10 times worse.
It is
10 times worse. You've seen it on the news. If you watch the news, you got people's rent jumping up like crazy. $1,000 from one month to the next. You got your lease is about to end and they just raise your rent $1,000 with no notice. You don't have to worry about that with a home. So is it a good time to buy? It depends on your situation. There's a no cost, no obligation consultation that you can do with me, the home loan coach, and let me coach you to home ownership. If you need to buy down, if you find yourself elderly, in a position where you can't get up and down stairs, you may need to go to a single story home. That's a reason to buy a house. If your family's growing, you started out single, now you got married, you got kids, you got to move up. That may be a reason to buy a home. Your financial situation has changed. You got a big raise, you got a job promotion, or you change jobs, and you want to put your family in a better neighborhood. So to have better schools, that is a reason to buy. Now, the question is, well, what about the interest rates? I say, what about them? I want to ask this question. What is the interest rate on rent? You want to complain about 4% or 5%. Guess what the interest rate is on rent? 100%.
100%.
So
it's 100%.
So if you got to pay 5% to get into a home, I think that's much less than 100%.
That's the trade-off. That's the trade. Hey, look, you practice what you preach. Coach knows what he's talking about. Look, and again, it depends on your situation too as well. So what I recommend too, if you are a full-time employee, W-2 employee, and you think that you don't have enough money to put down, here's the thing. You can tap into your 401k, just to let you know that. If you have a 401k, or even if you have an outside Roth IRA, and that's how I bought my first home, was with my Roth IRA. I think I pulled out $3,800 to put down. It was a $100,000 house. I had to pay $300 for. It was $3,500 down, $300 for the appraisal, $3,800, and I got into my condo. So, and here's another thing too, ladies and gentlemen, don't go for the home run on your first house. You don't have to buy that $800,000 house or $1 million house. If you have to buy a townhouse right now or a starter home right now, buy that, allow the equity to work for you. Then, hey, coach, I'm ready to purchase my second home. And then for those who have equity in your home right now that are in a better financial position, that's where you want to take a look at your equity for and using it as advantage as looking at a second property to put some of these renters in there, because there's still people out there that don't have the FICO scores. They may have the jobs, but they don't have the scores to get into a home. So you may want to look at that situation too as well. But it's very important to let you know that if you do have some type of retirement or some type of qualified money set aside, first-time home buyers can tap into that, and you will not be subject to taxation, just to let you know. So if you have a Roth, you have the 401k, 403b, 457, you can tap into that account as long as you're showing that you're a first-time home buyer and you will not be subject to taxation or having to pay that money back. So that's very, very important.
That's great. That's great information. Great information there.
One other thing I want to tap into is, you talked about the subject of estate planning, will and trust. So I just had a buddy of mine just pass away a couple of days ago, ex-NFL player Edward Jasper. And fortunate enough, I just found out that he listened to our advice and he got it done 2 years ago. I didn't know it. I realized my mom called me and just told me that he got it done. So he had his will and trust. He had the estate planning done, the life insurance, everything taken care of. 49 years old, 6 children, and being in the state of Texas, you do not want to go in probate in Texas. It takes a long time. So, yeah, so he got it done, man. So people, if you have some type of asset, I don't care if it's $10,000, you own a car and it's worth $10,000. Put that in the will, put it in the trust, set it aside, and you got money in your checking account, retirement accounts. You want to set this aside. You got jewelry, furniture, TV, whatever the case may be. Set that up so your children don't have to go through probate. And I hate seeing that so much, coach, man. I see that. Another family, they just sent me a message. Can I Zelle them some money for a funeral? I was like, I can't do it. I asked y'all 3 years ago. I asked y'all 3 years ago. Y'all said no. And now she's passed. Ain't nothing I can do. I can't tell you. So too many car washes going on. So that was real big. Yeah, that was real big. You touched on, because I had somebody text me. I had someone text me about that when you touched about that last time. They were like, hey, man, I need to look at getting mine done. As a matter of fact, they were listening to us on Facebook. They're in Florida, and they messaged me, said, hey, I need to get my will and trust done because I haven't gotten it done. So
absolutely, please do. Take it for somebody who's gone through it and still going through it with a tragic accident with my aunt. She put the will and trust in place, and the power of attorney. It makes life so much easier. And even with her doing what she did, it was still tough to get through. Making sure everything was done and taken care of. It's still tough. So right. Do all you can. Sit down and talk with Big Tex. Text, give them the information. Tell them how to contact you.
Hey, people got 702-751-5865, 702-751-5865, or go to defendersoffinanceshow.com. Again, our website is defendersoffinanceshow.com. Please leave your name, your number, your information, and what intrigued you. What do you need to speak to one of us about? Or if you need to speak to somebody in regards to credit or business credit, just anything. We network with so many people, so if we don't know the answer, we will be able to find the answer for you. And just to talk about credit too, let's stop shooting for, let me get a 600 or 620 FICO score. Let's shoot for the higher FICO score. Let's shoot for 700 FICO score. Let's shoot for the 750, 800. In the meantime, yes, you still got into that house with the 640, but don't stop there. Keep shooting for the 7s, the 800 FICO scores. Because if you just go for the bare minimum, sometimes you're going to fall off. So that's very important. And we do have people on standby for that as well to be able to help you out if you got late payments, judgments, liens, collections, etc. And I use a website called creditchecktotal.com. All you do is you pay $1 and it gives you all three scores, all bureaus. I've been using this site since 2006. So 16 years I've been using the sites. And the great thing about it is the scores come out about plus or minus 10 points. So when you pull it, and let's say it says your score is 700, well, if the coach actually pulls your score, we know it's going to be either a 710 or 690 within a plus or minus on average. I'm not saying all the time, but on average about plus or minus 10 points. Then make sure you cancel within 7 days, because if not, they're going to hit you over the head for $30. So pay that $1, get it done. But this is how you get your free credit check. Credit Karma is okay, but it's late. It's real late. So it's some type of accuracy, but it's really, really late. So another thing too is making sure that your debt ratios is at 30% on the credit card to keep your scores up. So when you sit down with coach, you're looking to refinance or you're looking to purchase, you want your debt ratios on your credit cards at 30%. Go ahead, and if you want to increase your scores, take off your old addresses, and do not, I repeat, do not call up the collection company and tell them that you want to negotiate, because you could be sitting at a 660 and you call up the collection company and tell them you want to negotiate and pay out that $800 bill. It will drop your score 600 points. I mean 60 points. It will drop, because what it does is it re-triggers it, and then you got to wait about 90 days for it to stop and then fall. So therefore, coaches.
I want to speak to that. You bring up a good point about not shooting for just the minimum. We have down payment assistance programs that you can get into as low as a 600 credit score, but you don't want to shoot for the minimum. Let me touch on this a little bit. First of all, rates is a hot topic. Everybody's concerned about rates. What is a good way to combat the higher rates? Is having a higher credit score. Do yourself a favor. Get yourself prepared. If you say, hey, look, I'm not interested in buying a house for another year, it's time to start talking now. It's time to give the coach a call. Let's start talking now. Let's put the game plan together. There are so many things that can trip you up in a loan. That's why you need to talk to a professional that can help you get ready. Higher credit is a plus. It will help you out on your rate. It helps you with approvals. There's Fannie Mae, Freddie Mac. Sure, most of you have heard about Fannie and Freddie. They're government-sponsored enterprises that have proprietary software that we have to run your application and credit through, and they're getting tougher. I have a client right now, had over a 720 credit score, and had money in the bank. Good job, and it just didn't like her credit profile. This government sponsor agency we run it through. Desktop underwriter and loan prospector, we run it through DU and LP. If we don't get an approval, it makes the road a lot tougher. We may still get a loan done for you, but when you get that automated approval, it just makes it a lot easier. So you want to get yourself together. So each week I want to, bring a tip to you to help you out. There's no one size fits all. You're going to have to make that phone call to get the information. But today's tip I want to give is things that pain us in the mortgage industry. There's several things that make a simple transaction hard. And one of them is a lot of stuff is predicated on your bank statement. Look at your bank statement, your bank account. We may have to look at it for reserves, meaning that after you do your down payment and closing costs, they want to see a certain amount of money in the bank. So we get things like transaction histories. Your mortgage statement is generated every 30 days. So what if you're trying to close a loan and we need to see a transaction that happened in the middle of that cycle on day 15? The way to do it is a transaction history. Now, most people, when you bank with, the popular banks, you can go online and get that transaction history. You can walk into a branch and get that transaction history. Now they got these fancy internet banks, they may pay you more interest. They may save you money. I don't know what the attraction is to them, but they're difficult to deal with in getting a transaction history, and you can't walk in and get any help. The reason why they may offer you a little more interest or better deals because they don't have brick and mortar. They're not paying a bunch of staff, so you can't reach anybody. I'm not saying don't use those banks. Use them, but also have one that you can walk into, that you can
Right.
talk to and deal with, because it could slow your deal down tremendously. So the tip of the day, the mortgage tip of the day is you can use the internet banks if you like, but have a Navy Federal Credit Union, have a Bank of America, a Citibank. I'm not a fan of the big banks. I'm not promoting and pushing them, but I am for convenience.
Right.
Convenience.
Absolutely. Absolutely. Hey, Coach, another thing too, I just thought about in regards to combating the interest rate. If a client is financially in a good position, you can buy your rate down, right? Is that still possible?
Yeah,
So, hey,
absolutely. That's
Mr. and
another
Mrs.
one.
Client, guess what? This interest rate is 4%, but for extra, I don't know how much it is, we can buy it down to 3.25 or 3%. Hey, who knows what that payment looks like on a $400,000 house or $500,000 house by buying the rate down 0.75%.
That's
So
the
you
benefit of calling the coach. That is the
got
benefit of calling the coach.
702 751 5865 702 751 5865 or defendersoffinance.show.com. Please log in to defendersoffinance.show.com. Let the coach know that you're looking to purchase, want to look at your credit. And again, go to credit check total. So therefore, you're not just spinning your wheels. Pay your $1 and keep it. Save that PDF on your computer so you can track where you're at. So if you're at a 550, I want to buy a house next year by 2023. I'm at a 550 now. So in the next 3 months, I should be at a 580 or 600. You got to track yourself and put yourself on a schedule. And then you'll be able to contact. And for those out there, look, if you're looking to, and like you said, we're not a one size fits all. So if you're someone that doesn't qualify through my traditional financial routes, allow us to still put a plan together for you so you don't leave your family desolate. So if you don't qualify, because part of the financial qualification is going through insurance, so sometimes they may ask for a medical history. So then we can set up a side account that I like to use, a company called M1 Finance, where you can start putting a couple of dollars to the side, like you're funding your own life insurance policy. You start putting it to the side. I actually have one myself, been having it for 2017. So just, even if you're putting in $50 a month or $100, 25, just to fund it, just to say this account is strictly for, if something happens to me medically, and if I don't have any insurance, my husband or my wife can go tap into this account and pull these monies out. Well, that's our show. We're wrapping up. We will be back next week with you. And look, April is almost over with. We're about, Coach, we're 3 weeks in? What's today, 20th?
Today is the 20th, 420.
So we're 3 weeks in. So it's going by fast. 4 months is just about gone. I can't believe it. It's just about gone. So I trust each and every one of you had a good time. Hey, please tune in next week, same time, 1 p.m. We are the Defenders of Finance. I am your host, Terrell Big Tex Robinson, and we got Tim, the home loan coach, Haskins on, just bringing all the financial heat to the streets. And we will see you guys next week. You guys have a great weekend.
Have a great one. Have a great one.